Hello everyone and welcome back to a new video. Now let's take a second to talk about student loans. I know we all hate student loans, and for some people they just seem like they are never going to go away. It's like that dark cloud always above your head, okay? Think about if you actually didn't have student loans. Like let's say you owe $40,000 in student loans. If you didn't have that loan, you could buy yourself a Tesla, or better yet, you could have a down payment for a home. But today, I'm gonna show you how you can actually buy a home with a massive amount of student debt. Now, if you don't know, I am a mortgage lender in Arizona, so I see this firsthand. People come to me to get the conversation started on if they're gonna be able to buy a home or not. So, I'll run people through essentially the key components of what you need to actually qualify for a home. Things like, work history, down payment, if any at all, and more importantly, credit, but not necessarily just credit scores like everyone thinks, but also your monthly liabilities. And ultimately, it comes down to something called your DTI, or your debt to income ratio. And this is hands down the biggest problem or roadblock that I see on a daily basis is debt to income. Everyone thinks, hey, Shawn, I want to qualify for a home that's way up here. And I'm like, okay, well, you only qualify for a home down here because of your monthly liabilities. And of course, there's ways to move some numbers around, get them to align properly so you can actually afford the home you want to afford. But I don't want to get too much into it in this video. Essentially, your monthly liabilities are the things that you are paying every single month. So things like car payments, we got your credit card bills, and more importantly, your student loans. And each specific loan program has a specific DTI, or debt to income ratio, that you are allowed to qualify for that home. So let's say you make $10,000 a month. Okay, that's your salary. You're making 10 grand a month, not too shabby. And let's say you pay $3,000 in liabilities every month. You got a car payment, some student loans, some credit cards. So essentially, you're paying $3,000, you're getting $10,000 every month. You have a 30% debt to income ratio, which isn't terrible. But what I'm trying to get at is the fact that DTI is impacted heavily when you've got a crippling student loan payment. If you have a student loan payment of $500 every single month, that is going to absolutely crush your DTI. But wait, Shawn, I've heard that I can just defer my student loans. And for those of you who don't know what a deferment is, it's essentially a delay. You can actually delay on paying your student loans without actually being penalized for it. Or people might say, hey, you should just seek forbearance instead, which is very similar to deferring on your student loans, but a forbearance is usually when you just lower your monthly payments a little bit when you're going through some tough financial situations. But I'll be the first person to tell you, no, deferring your loans will not drastically make an impact on your financial situation when you are trying to qualify for a home. Why? Because us lenders have to hit you for 1%. So essentially that means I have to hit you for an imaginary 1% payment on that student loan to add to your debt to income ratio. So let's say you owe $60,000 on your student loans, I have to hit you for a $600 a month payment on that sucker, which is absolutely going to kill your debt to income. Unless you're balling and you're making some really good money, that $600 is going to hurt big time. However, I will say that it is smart to defer your student loans for say 6 months if you don't have any type of savings built up in your accounts. Because if you defer your payments for 6 months, you could basically save $3,000 to $5,000 that you otherwise would have put into your student loans. This can be big when you're trying to buy a home, because once you've saved a little bit of money in the bank, you can go back to actually paying on your student loans. And since you have that $3,000 to $5,000, you might be able to go the conventional loan route. And one of the many pros of going with a conventional loan is the fact that I probably don't have to hit you for that 1% monthly payment on your student loans. If you're paying $350 a month on your $60,000 loan, you're going to be in a much better financial situation in terms of your DTI versus that $600 a month that's going to absolutely crush you. Plus, you'll be putting more money down because you're able to save that $3,000 to $5,000 when you deferred your loans. So now your loan amount on the home is actually lower, essentially saving you more money on your monthly payment. It's a win-win. Now, just a disclaimer though, the FHA dudes on the other hand, they're going to hit you for 1% no matter what, so you're pretty much screwed if you have to go that route. But let's recap. Do I recommend you defer your loans? No. No, 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 nah, no, definitely not. I only recommend you defer your loans if you have a plan of attack. If you think you can defer your loans to hide your debt to qualify for a loan, you're wrong. You're really just delaying the process, and you're honestly making it harder for you to actually buy a home. There's no point in wasting your time. I mean, time is money. Come on. Okay, so I recommend you first come up with a plan. Talk to a lender. Figure out how much money is going to be needed for down payment. What's my credit score going to need to be? Then talk to whoever has your student loans. Can I even lower my payment if I wanted to? Can I defer them if I want to? And you need to know that federal loans and private loans are handled way differently. So first you need to figure out which one you actually have. But ultimately, once you've done your research, once you've got your plan totally figured out, that is when I recommend you defer your payments, only if you need to defer your payments to reach your goal. Which honestly, most of the time, deferring your payments isn't working towards your goal. Again, it's only really working towards your goal if you need to save up some money for a down payment. Once you have a little bit of money saved up, it's usually so much better to actually actively be making payments on your student loans than to take that 1%. And all of this was probably super confusing. I tried to break it down as best as I possibly could. I could have gone into so much more depth about specific loan programs and specific different types of student loans that you could be in, but ultimately, you don't need to know any of that crap. You only need to know what it takes for you to get into the home you want to get in. The people who work in the business need to know that stuff. Again, not you. So talk to someone in the business. They will give you a specific roadmap as to what you need to do. And I'll be the first and probably only lender in the entire world to tell you that maybe buying a home isn't in the right cards for you if you have a ton of student debt. Maybe it's in your best interest to actually aggressively pay down that student debt before you buy a home. I know, it's unheard of for a lender or a real estate agent to tell you to not buy a home, but there's no point in putting yourself in a worse situation than you already are. Believe me, I'm big into finance. I see this stuff every single day when I'm pulling credit reports and I'm seeing people's liabilities, okay? Sometimes it's just not in your best interest to rack on new debt, okay? If you have a lot of debt, here's what I recommend. Rank your debt from biggest to smallest, start from the bottom at all the smallest debt that you have, and aggressively pay each one off all the way up to the top, okay? That is gonna put you in the best financial situation when you have less debt. But ultimately, that's my take on buying a home with student debt. Let me know what you think in the comments down below. Do you agree with me? Do you not agree with me? Is your situation similar to this? Let me know down there. And again, if you're in Arizona and you got any questions at all relating to mortgage, maybe your first time home buyer, any type of that stuff, head on over to lending.shawnmalkou.com. And hopefully you enjoyed the video and actually learned something new. That is the goal of this. I know student debt can be very tough sometimes, that infamous cloud above your head. So hopefully this did make you feel a little bit more comfortable. And the best tip I can give to anyone with student loan debt is the fact that you need to know exactly when those suckers kick in. You need to know exactly when you need to make your payments and just make them on time, take care of them, and there won't be any issue to you, okay? I honestly see the biggest struggles, the biggest issues from those who aren't sure when their student loans actually kick in. They start racking up a few late payments, credit scores drop, end up owing more on their student loans, and it's just this downhill spiral. So take care of that from the get-go and you'll be totally fine. But that's it. Thanks for watching. Hit that like button and subscribe if you're new around here, and I'll see you in the next video.